Okay, guys, well, it's probably a good time to kick this off. Obviously, with the coronavirus and the economic impact, there's a lot of pressure on our financial sector, and we're flush with resources at Master Electricians, having some wonderful partners in Energy Super, who's been a Master Electricians partner for many, many years. And I do know they put the energy in super. Sorry, Robin, we've got to go to that one. It's my favourite.
So much.
But also a newer partner in Bendigo Bank, who's done wonderful things for Master Electricians and our members over the last couple of years. So I did want to first introduce Ms. Robin Petro, the CEO of Energy Super, along with Kevin Wan Lum, from our Chief Investment Officer from Energy Super, who are going to take us through some of the stimulus package and options and impact on the market that the coronavirus has had. So we'll start with Energy Super, and I'll hand over to Robin Petro to give a bit of an introduction there. Thanks, Robin.
Thank you, Malcolm, glad to be here. Just before I start, on behalf of all of us in the financial services industry today, I do need to let you know that this is general advice only, and it's not taking into consideration anybody's personal needs or wants. Energy Super's been very busy over the last few weeks, both from an employment as an employer and making sure that our staff are well and looked after, but also as a result of the need to support our members through a very, very trying time. And so I've brought Kevin on to today's session so that he can also talk to you about the investment side. But what I thought I'd do is share with you some of the impacts on superannuation as a result of the economic response that the government released last Sunday. And so I will just put those slides up if you could, and then I'll hand over to Kevin, who will talk to you through the investment markets. Thank you so much. So the government announced on Sunday that there was 3 areas that they were looking at, both supporting individuals and households, support for businesses, and supporting the flow of credit. And so what I will talk to you about today is the first point, and just give you a couple little things around the superannuation space that has made changes. The first one, which is the one that's got the most attention from our members at the moment, is the early release of $10,000, both in this financial year and the next financial year. And so that's going to commence from mid-April. It will be an extension of the compassionate ground rules, and it will be of a $10,000 this financial year and $10,000 next financial year, and it will be tax-free. One of the things I will point out, though, is that it is to be applied through the ATO and through the MyGov website. Now, that $10,000 is something that people can draw down, and it also covers off New Zealanders who are also have superannuation in Australia, but it doesn't cover off temporary residents. I will explore that a little bit more later on with you, Malcolm, about whether this is the right thing to do or not the right thing to do. And as we go through the packages, and I know Margot's got a few other areas and thoughts in that place. But as with superannuation, it's always a long-term investment, and we need to be thinking about the impact of today and the long-term impact throughout the retirement phase as well. The other one that was also very pleasing is the pension payment drawdowns. Now, this happened during the GFC, and it's also happened again. And what that means is that members can reduce their pension payments to actually manage the market volatility. The problem with the $10,000 is the fact that there is the potential of crystallizing losses. There's also the potential of not getting rid of, not maximizing compounding interest. But at the same time, it is a worthwhile exercise for those people who are in need. The pension payment minimums is also another way of people being able to maximise the benefits and minimise the amount of volatility, and drawing down during this particular point in time can be quite troublesome. And then the final one is just the social security deeming rates, and they will also be moved as well, and that means that there will be more people who will have access to support from the government. We go on to the next slide. What I thought I'd do is just talk to you a little bit about some of the things that are going on in Energy Super and some of the questions that are coming through from our members and also our employers. And the first one is that on the 1st of April, which is pretty much next week, the government regulations are changing, and so we are actually cancelling insurance cover for people under the age of 25. And I think it's a real shout out from our team that if you are being approached by us, would you please provide us with your data so that we can support members, because we don't necessarily want to be cancelling insurance cover for people at this particular point of time without them fully aware of it. But it is a piece of legislation we need to change. One of the other things that's coming through is around income protection insurance. And there's a lot of people who've been coming through asking whether income protection insurance is related to people who have lost their job. And I thought it was worthwhile just pointing out today that income protection insurance is actually medically related. So you do have to have an injury or an illness. But the good news is that the coverage will be for 6 months when you are not actively employed. So that cover will continue for at least 6 months after employees are no longer employed. And it also does cover coronavirus. And so if you are sick, and it's not quarantined, it's if you are sick and you are sick for longer than the waiting period that's chosen, then coronavirus is covered. The other questions we've been asked about is whether we should switch or not, and really that whole uncomfortableness around watching the markets move up and down. And there's a few points that we've been making, and that is that crystallising losses is an important thing that people need to be thinking about at this particular point of time. As we've seen with the toilet paper phenomenon, the market is irrational at the moment, and therefore thinking that you can time the market and do it well is really a bit of a risk that everybody needs to be thinking about before they make any sort of switch. And look, markets will continue to be disrupted, and they have been disrupted and will continue to do so. It works in cycles. The unfortunate thing about this is that it's not always a perfect circle. So we're not always knowing what's going on. And I think that's really important. And Kevin's going to explain a little bit more about what's happening in the market space. But those are the things that people should be thinking about when they're thinking about their superannuation. So what can you do? There are not quite a number of things that we offer to our members to help them through this particular challenge. We have over the phone advice, and we are still offering that service while our contact centre is experiencing higher calls coming through. We are still operating today. Cease payments if you're in the pension, if you have that opportunity. Again, seek some advice and some support in that space. But the government has allowed you to take control over how you want to manage pensions if you are in the pension phase. And then need to start to think about and talk to our advisors about all of the investment options you're in. Think long-term, short-term, medium-term, because as we know, markets will go up and down, and we need to make sure that over the long term, we're using the magic of compound interest. So I'm going to leave it there for my introduction, Malcolm. So thank you for that. And it was a good opportunity to share with you what's going on.
Thanks, Robin. And I understand Kevin was the Chief Information Officer, was also going to give us a quick brief on the markets, which, as you said, have been very volatile. What's going on there, Kevin?
So first thing I'd say is that the first bullet point in my slide is already out of date. Markets are completely up and down at the moment. So for example, this week, and to Robin's point about switching, and we don't know what markets are going to do, this week, the Dow Jones is already up 20%. So in 4 days. So for those members that switched out last week, they've missed a rebound this week. But markets have fallen, things are changing on a daily basis. The key thing to remember though is that this is very different to what we've seen previously, say in 1987, but also the global financial crisis, where those types of events were as a result of financial stress in the system, and then it flowed onto the economy. This is quite different. This is stopping the real economy. So as we know, everyone's shut down. People are being laid off jobs and so on. So this is certainly very different. But what's good is that governments are literally chucking the kitchen sink at helping economies around the world. So the reasons why markets have gone up this week is because the US government has just approved a $2 trillion, so that's US dollars, stimulus package. On top of what we've seen locally. So for example, we've seen, Robin talked about the small and medium enterprise stimulus. That's 66 billion. You've got the broader measures of around 18 or 19 billion announced on Sunday. So, governments around the world are chucking the kitchen sink at this. They are, trying to make sure that, there is going to be an impact in the short term, but we're trying to dampen it. In terms of what we're doing, we can't predict when markets are going to go up and down, so we invest for the very long term. And as Robin said, we're looking to just be long-term investors, make sure we harness the magic of compounding, because we can't pick these market movements. In terms of what we're doing right now, we're actually watching markets relatively closely to see if other things worth investing into now are cheaper prices. At the moment, we probably don't think so. It's a little too soon, but we're ready to pounce when those opportunities present themselves. In terms of, if you are worried, as Robin said, go get some advice from our advisors. If we could move on to the next slide, just to give you some context, and this looks back at your superannuation over the last 15 years. Now you'll see the grey bar right at the very far right for 2019, 2020, that says minus 10.8. That was a few days ago. That's probably more like 7% now because of the market movements the last 2 days. But what's really important to remember here is that the red line there, that's what we're trying to achieve on behalf of our members. So that's inflation plus 3%. So we've assumed that inflation is 2.5% and then 3% over that. So that's what we're aiming to deliver. And then if you look over time, there's been different periods where it's been 14.8% back in 2005-06. More recently in 2012, 2013, it's been 15. And then in the last financial year, it was 5.4. And in that entire period, even with the negative returns that we saw during the global financial crisis, so you've got minus 4.8 in 2007-8, minus 12.5, and even now, that green line represents the return that you've received as members, which is 8.8%. And that's probably slightly better. As I said, this is now a few days out of date, and that's how quickly markets are moving. So again, remain focused on the long term. Don't switch, and just get some advice if you're worried. So I'll stop there, and I'm sure there'll be more questions coming.
Thanks, Kevin. And just to remind the members online, you can type your questions in the Q&A section on the webinar, and I'll be happy to put them to the panelists shortly. If I can just come back to you, Robin, and talk about $10,000. And I understand you can't give individual financial advice, but I've heard a bit of argument for and against this issue. What sort of issues should you consider before making a decision to access that $10,000 package before and after the end of financial year?
So, Malcolm, I think it's like anything. Once you've been given the opportunities to think about your financial situation, you need to factor in everything that's going on around you. So the government, when they announce their packages, and I know Margot will be talking about it from the banking industry, but there are plenty of opportunities for members to be thinking about, and for all of your clients to be thinking about what is the most beneficial to each and every one of you. There are other opportunities, and the thing with superannuation is that it is meant to be saving for retirement. So if we have a 20-year-old today, and this is an Industry Super Australia stat, that if we had a 20-year-old today who took $10,000 out, that is a cost of $120,000 to their retirement savings. And so there's always a quid pro quo that needs to be looked at. So what my suggestion would be is to be thinking about all the ways that you can support yourself financially. Look at the government packages that are on offer at the moment, and there are quite a few generous things that are going on at the moment. Think about how you can manage your mortgages, and think about all of those things before you actually make a decision. I think there's one thing that we need to make sure that people are doing is thinking rationally through all of the options that they have available to them. And if superannuation is their go-to place, then we are here and ready to support that. And I think that's really important too. But my only caution is to really just think about all of the avenues before you actually jump, because they do have impacts that will go beyond the coronavirus that we're now experiencing.
Excellent. Thanks, Robin. And if I can just come back to you, Kevin, quickly. It's about the investment decisions for Energy Super. You've obviously got a lot of smart people in the building who work out where to put the money. What are some of the strategies you use to protect against things like these sudden market impacts that we've seen recently? I've noticed my own balance, which is in Energy Super, hasn't gone down as much as the market's gone down. So how do you actually achieve that sort of a result?
So we do that, Malcolm, by making sure that our diversified investment options have a bit of everything. So what I mean by that is that we don't try and put all your eggs in one basket. So for our My Super members, just by way of example, we've got about 55% in shares, and then the balance in a mix of cash and bonds and property and infrastructure and other alternative investments. So we use the power of diversification to make sure that we can smooth out the ride. So people can't see what I'm doing with my hands, but typically markets go up and down like the share markets. We want to make sure that we don't go down as much as what share markets typically do, but conversely, we won't go up as much. And what we're doing there is we're harnessing that magic of compounding over time.
Excellent, thanks. Now we've got Margot on the line. We probably should actually come to you soon, Margot. Bendigo Bank's
that's okay.
done a lot of good work with us in the last couple of years, and a lot of the government stimulus or rescue packages are actually in conjunction with the banking sector. If I can just introduce you as the Regional Manager Queensland for Business Banking, so you're right in the sweet spot of the area that our members are needing help. Can I just get some opening comments from you in relation to the financial assistance packages out by the government at the moment?
Thanks, Malcolm. Look, our role as a bank and as essential service provider is really critical to help our customers weather the storm of COVID-19. To support our small business customers during this unprecedented time, we've announced a number of initiatives. So if you could put the slide up, I can go through those initiatives that we've put out to support our small business customers. Next slide. Thank you. Look, the first thing that the bank came out with when probably 2 weeks ago now, time's been moving very quickly, was our financial assistance package for all affected businesses. So that means our customers that have home loans or business loan customers can apply for relief on loans for up to 6 months. So that's basically effectively they can get a deferment of their monthly principal and interest, or even interest only loan repayments. They can be deferred for 6 months. So that just gives them just the freedom to have a little bit of pressure taken off with respect to cash flow on a monthly basis. We've also looked at waiver of fees for restructuring or consolidating loans. So that's when if a customer's got a number of loans and to reduce their monthly cash flow repayments, we can look at restructuring them and not charging the usual fees to do that. There's some discounted interest rates on personal loans taken out by existing Bendigo Bank customers. Waiver of interest rate reductions for early withdrawal for term deposits. So those customers that have got money on term deposit and it's got another 6 months or a year to go of the term, we've waived any fee to break that and withdraw that money if they need to. And then there's deferral payment and extension for equipment finance facilities for up to 6 months. If you could just go to the next slide. Now, the next step, that was what the bank looked at offering all our customers from day one. Then the Australian Bankers Association got together on the 20th of March and announced that they will support all small business banking business customers financially affected by COVID-19 by deferring their principal and interest repayments to 6 months. So that's any customer with business finance under $3 million. And then if you can go to the next slide. And the last thing that I just wanted to mention today was with respect to the Commonwealth Government came out on Sunday night highlighting the SME Guarantee Scheme. Now, we're currently, as a bank, we're currently working with the industry and government on this to help small business access working capital to assist with this impact. Now, these will be small business loans for $250,000 that are partially guaranteed by the government. If you can just go to the next slide. So I just really wanted to sum up our commitment to small business at this time with what our options are with respect to how we're going to support our customers through what is definitely unprecedented times. Our commitment to our customers and their communities has always been to support them through both the good and the tougher times. Small businesses are the engine room of our economy, employing millions of our fellow Australians, and their success feeds into everyone's success. Now, this was a statement made by our Managing Director, Marnie Baker, and it just really highlights where Bendigo Bank is sitting with respect to supporting our customers through this time. We truly believe if we don't, then it will have a broader impact on our communities that we need to feed into everyone's success.
Thanks, Margot.
Just on the last slide, and this may be something that we'll share with everyone on the webinar after. It's just some really helpful links with respect to what the government stimulus package has been. And all I can do is what I've been doing with all of our customers is really encouraging them to reach out to their advisors, their accountant, or their financial advisors, just to have a really good understanding of what is on offer. Obviously, we've heard from with respect to the super side, but there's numerous options out there. But I really recommend you taking the time to get that advice.
Thanks, Margot. That's very helpful. Can I ask, businesses in distress through this time, and the normal process of applying for loans with the bank can be quite tedious and onerous. I'm just wondering what you might have done with the application process in often a contractor proving they have the assets to get out the loan, and the business might not look too good at this point in time. What are you doing around that process to make that easier for contractors?
Look, thanks, Malcolm. The bank really does understand that in some instances, businesses' revenue could have dropped dramatically in the last month, and forecast for this to continue. Our customers' relationship managers are there to discuss all the financial assistance packages that are available to them, and really to make it a straightforward process as possible to access this assistance. We put in some streamlined processes, particularly around getting the repayment relief, and we're also currently working on a different process for respect to getting access to that cash flow, 250,000, up to 250,000 that will be available for businesses under the government grant program.
Oh, okay, thanks. And look, secondly, the second part of the program there was in relation to the business relief package. What sort of thing is the bank looking at, or the government, in the demonstration that the business is in distress? What sort of criteria would a contractor need to provide to tick a box and access that money, or defer those loan payments, should I say?
Yeah, thanks, Malcolm. So businesses with less than 3 million in lending, so in a business loan, it is a self-assessment process. So it's up to the customer to determine if they are in hardship. They don't need to provide evidence, but if they feel that they are in hardship, then we accept that. And their relationship manager at the bank has the delegation to approve that. And this has resulted in very quick decisioning time. So it really is a matter of the customer talking to their relationship manager, having a conversation, working out the best options, but it is very much about them making that determination, not the bank.
Thanks, Margaret. If I can come back to Energy Super and maybe you, Robin, I know from my experience dealing with Energy Super, you have a range of options within the super fund of how I invest my money, and I'm a bit of a risk taker. I like throwing a lot in high growth, and then I switch it back to balanced at times. Now the market has fallen sharply, and I don't want to take my money out of Energy Super. Should I consider switching those options, get it back more into a bit of high growth and catch a bit extra on the way back up, or something like that?
Well, Malcolm, you're bordering here on asking me for personal advice, but what I can say, and I can say that you can speak to our advisors about that, but what I can say is that when the markets are so volatile as it is now, doing switches and moving money around, unless you absolutely have to, would be a risky move as far as crystallizing losses and so forth. I think, at the end of the day, it really comes down to your own personal circumstances about whether you have the time to ride through some of these volatilities, whether you actually are sleeping well at night, because some people do worry about these sort of things. And all those things are all very normal and very appropriate. And so from my point of view, I think, again, getting some advice, thinking through all of the potential benefits, but also the downsides of doing these is a really important part. And that's really about just calmly thinking through all of the other swings and roundabouts. We have a lot of information on our website to sort of give you some views about how to manage the market volatility, what to be thinking about when you're making decisions, and to really sort of give you the empowerment that will support, I think, people through this particular volatility.
Okay, thanks, Robin. And maybe, Kevin, you give us some insight to inside Energy Super when these major events occur, what process you go through to limit the damage of recent slides. What do you move anything? Do you just lock everything down? How do you assess and make those decisions on where to put the money?
So we don't look to make any knee-jerk type of reactions to when these types of events happen. Going back to what I was saying earlier, we can't predict when these types of events in particular happen. This one, something like a 9/11, something like the tsunami in Japan, they're things that we can't predict. So again, we focus on the long term. And what we're doing right now is we're just, watching the markets and thinking, okay, so, when we get a little bit more certainty, where can we start investing into assets that are now much cheaper? And we'll look to take advantage there and make money that way, rather than trying to go, okay, well, we think the market's going to go down today, so let's sell, and rather than buy tomorrow and so on, because we really don't know. If we think back to what I was saying earlier about the US share market this week, if I thought that and I knew with certainty that the market was going to go up 20%, it would have been an easy decision. Let's just buy more shares, but no one actually knew. It could have equally gone down 20%. So we basically.
I think it's worthwhile, Kevin, just talking about some of our shares and some of our assets are actually doing very, very well at the moment, and are actually thriving as a result of some of the things that we are seeing through this pandemic. And so this is not always a one size fits all. And so we work with our fund managers, and we're actually looking and readjusting our holdings in various shares and various assets and so forth. But again, we are seeing some of the negative movements are actually as a result of market sentiment. And that means that the underlying assets themselves aren't being impacted here. It's what people think they're worth. And that's really about the whole, the way that the markets are valued. It's based on what people feel. And you can see that through the share market every time Donald Trump makes a 140 character tweet. Every time Scott Morrison makes an announcement, you can see what people think through the way that the share market has moved. And I think that's a really important point to note, that sometimes we actually can't understand that. But a lot of the assets underneath this are actually very, very solid. And a lot of our assets are actually doing quite well.
So all my shares in Woolworths and Officeworks and Zoom are going to do quite well at the moment, is what you're telling me there.
That's exactly right. So, and Netflix, everything that you need to use while you're at home. And just one more thing to keep in mind. Think about your house is the easiest way to think about it. Did the value of your house, was it very different 6 weeks ago as it is now. And it's the same deal in about 6 weeks' time. Nothing really changes with the value of the house unless, you're missing a room all of a sudden, or you've created something. So, that market sentiment that Robin was talking about is driving a lot of what we're seeing.
That gives me a lot of hope it'll come back sooner rather than later. Thanks for that, guys. Just back to you, Margot. If I can just talk about time. There's a lot of our members in distress. We've had a number of calls directly around how quickly some of this money can roll. Have you got any foresight into when some of these, apart from actually deferring the loan payments, some of the other loans and some of those things, when we could actually get some of those things in place? We've just lost your sound, Margot. Just check we aren't muted. There we go.
Oh, sorry. I think
That's
someone is unmuting me. Sorry about that. Look, obviously, I suppose the key one for everyone on the call would, the one that they probably would like the answer on is the government-backed guarantee loan facility for cash flow. Now, when this was announced, there wasn't a lot of detail put with it, and it's something that the bank does need to, the Commonwealth, to provide the guarantee. They do need us to assess a customer's ability, and there is, it's not as straightforward as what, I suppose was announced in with respect to, deferral of repayments is something we've been able to do very quickly. But behind the scenes, I can only talk about Bendigo. We are working very quickly to have that to the marketplace and anticipate that we will have it available to our customers as hopefully by as early as next week. And that process will be different to a normal application for finance. It will be streamlined. Unfortunately, today I can't give you a lot of detail on it because we really are still working. You could imagine some of these procedures and processes can take us 12 months, and we're trying to do these in 7 days. But they will be available, and Bendigo is definitely participating in the scheme, and hopefully have it available for our customers as soon as possible. And look, I can't talk on with respect to other banks, but I know from commentary I've been reading, they're in the same position, but also working very hard to make sure we can get these small business loans out to the customers that really do need them.
Thanks, Margot. Sorry,
I said I hope that answers it.
No, you've done well. I think it's fair to say from experience that the process and the time that Bendigo's operating under has been very timely to market compared to the Big Four, and the reason we certainly like dealing with them in our industry. Just a reminder to the members online, if you do have a question of Margot or Robin or Kevin, just pop it on the Q&A section. I'll be happy to put it to them. I'm running out of my prepared questions, so if we don't get any more, we'll probably wrap it up. But if I can go to you with one more, Margot, and that's really about the long-term impact. Are you seeing anything in this? It's probably early days, but are you seeing anything in the COVID-19 which will have a longer-term impact on the bank's ability to provide services to customers?
Look, Malcolm, that's it's a difficult one to answer given the time frame of this current event is really unknown. We just don't know how long the current impact is going to last and how deep it's going to be. But the longer the period of disruption, obviously, the greater the impact. However, the Australian banking system was in a very good position coming into this crisis. In the last the changes to capital adequacy that have been put in place particularly since the GFC, have really put us in a great position to enter this crisis. We are very well capitalised, and we have low levels of distressed assets. That is one area that we will definitely be impacted in the future, is with respect to bad debt. But we did come into it with extremely low levels.
Excellent. Thank you for that, Margot. Look, I don't have any questions online. Margot, if I can just double check with you, if any of our members want to contact you to get some advice on how to go through this process, what's the best way to get in touch with Bendigo Bank as a Master Electricians member?
Look, I believe that on your website you do have a link to Bendigo Bank.
Yes.
If there's any issues with that, you're more than welcome to share my email, and I can make sure that your members can get access to someone who will be able to give them the right advice.
Well, we might put those contact details on the video when we record this and play it again later to the other members. And Robin, as well as getting your contact details, can I just check in if you want to, we'll probably wrap up this show as we don't have any further questions. Do you want to give a wrap up or any closing comments there in relation to COVID-19? We're still muted, Robin, hang on.
How's that?
That's much better.
Yeah, sorry. Thank you. I was using the space bar, but it stopped working. I think it's worthwhile mentioning, just for your panelists, that there are quite a few accounting changes that are also being flagged by the government, and it's probably worthwhile having a chat to your accountants as well, because there are some things around depreciation, cash flows, and other range of things that are really there to sort of support your cash requirements. So I would suggest that that would be something that would be useful for your panelists as well. As far as superannuation goes, I mean, we are here to support you and your employees where we can. Our website has a lot of details on there already, and we are continuing to add to that. Contact centre is open, and we are going to keep working and making sure that we are visible and providing the support and the needs to everybody.
Thank you, Robin and Kevin. I do appreciate you coming today. Margot, have you got any closing comments or other information for our members online?
Thanks, Malcolm. I'd like to conclude on a really positive note, just to share with everyone on the webinar, is our Bendigo Bank Chief Economist, which is David Robinson, made the following comments in his recent economic update, and I just think it's beneficial to share. The three factors that may help the domestic economy in the months ahead are that we really have low level of the Aussie dollar. It's been down to 55 cents last week, with the likelihood that China may be the first in, first out, and they're one of our largest trading partners. And obviously, our AAA credit rating and relatively low levels of government debt made the above package, the package that the government's announced, a lot more affordable. Although debt to GDP ultimately peaks, now will be a challenge for the future. But the fact that we've gone into it in such a strong position, I think is really going to help the Australian economy.
Thanks, Margot. Appreciate your time. Between Bendigo and Energy Super, I think you've given our members a wonderful snapshot of the future. I'd just encourage our members online, if you've got any further questions you didn't want to ask publicly, you'd pop them a line. We'll publish those contact details and you'll see the links on our website. And I'm pretty certain we've recorded this webinar and we'll be able to play it again later if you want to double check on any of the comments and points made. But just stay tuned with us, because I think in coming weeks there'll be more developments and more changes, and we might have to give a further update down the track. So I do want to thank Energy Super and Bendigo for working so closely with us and our membership. You're invaluable partners in these sorts of times. So Thank you, guys, and thanks, members, for joining us. We'll catch up again soon. Thanks for your time.
Thank you.
Thank you. Thank you.
Thank you.